Welcome back to Investing Talk Podcast.
Today, we are cracking open the file on Uranium Energy Corp.
Okay, I have to admit, when I saw uranium on the schedule, my first thought was, well, heavy.
Yeah, I get that.
And not just the atomic weight. I mean, usually when we talk about mining stocks, it's a bit dusty, digging holes, moving rocks.
It is entirely different. Look, if you view this as just another mining stock, you are missing the forest for the trees.
Okay.
We need to frame this correctly right off the bat. This isn't just about pulling rock out of the ground. This is a bet on the intersection of two massive global forces.
Which are?
The insatiable energy demand of artificial intelligence and, honestly, national security.
AI and national security. That sounds more like a sci-fi thriller than a mining report.
It does, doesn't it? But think about it. We were looking at Uranium Energy Corp UEC, which is essentially positioning itself as a domestic production monopoly in the United States.
A monopoly.
We are talking about energy independence in a sector that has suddenly become absolutely critical for the future of tech.
And the timing here is wild. I mean, I'm looking at the date today. It's January 24, 2026. This whole sector has been going absolutely bonkers.
We are at an absolute inflection point.
Right.
For years, UEC has been what we call a development story, a promise, a maybe one day.
Right. A lot of hope.
But right now, literally in this window of time, they are moving from a development story to a cash flow story. And that is usually the most explosive moment in a company's life cycle.
Okay, before we get too deep into that explosion, a quick reminder to everyone listening. As usual, before we start, subscribe, like, and comment to this video to support the show.
It really does help us out. So I know you've been scrutinizing the numbers. Usually, you're the one pumping the brakes when I get excited.
Well, let's unpack this, because I did look, and if I'm being the honest skeptic here, the headline revenue number is, frankly, ugly.
How ugly?
We're talking consensus estimates for fiscal year 2026, projecting revenue of just under $60 million. But that's actually a decline of nearly 11% from the prior year. So I have to ask, you're saying this is an explosive moment, but the company's revenue is shrinking. Why should anyone care?
It's a fair question. And on the surface, if you just scan a spreadsheet, I agree, it looks bad.
It looks really bad.
But this is why we do the deep dive. That revenue dip is a mirage. It's masking a massive operational transition. You can't just look at the top line right now.
Okay, so prove it. Show me the efficiency then.
Look at the EPS trajectory earnings per share. The projected EPS for FY 2026 is negative 10 cents.
So, still losing money? That's not really helping your case.
Patience. Context matters. That negative 10 cents is a 41% improvement year over year. They are slashing their losses dramatically.
41% is a big jump.
It is. And if you zoom in even closer to the current quarter, the projected EPS is negative 6 cents. That is a 500% improvement compared to the same quarter last year.
500%.
500. That tells me the operational leverage is kicking in. They aren't just burning cash anymore. They're ramping up the Hobson ISR facility in South Texas.
Okay, you mentioned Hobson, and the notes mention ISR. We should probably stop and explain that, because I think of mining, I think of giant pits and trucks. Is that what this is?
No, and that's a crucial distinction. ISR is in-situ recovery. Think of it less like open heart surgery and more like laparoscopic surgery.
Okay, I like that analogy.
Instead of digging up all the rock, they drill wells, pump a solution down into the ore, and dissolve the uranium right there in the ground. Then they just pump the liquid back up. It's cleaner, it's cheaper.
So they're basically drinking the uranium out of the ground in the straw.
Exactly.
Yeah.
And Hobson is the central processing plant for all of that.
Got it. Which brings me to the other acronym, UR&C.
Right. Uranium Resources and Conversion. This is part of their vertical integration strategy. Most miners just sell the raw uranium, the yellow cake. UEC wants to capture the conversion margin too.
So owning more steps in the process.
Owning the value chain.
Okay, so while the revenue looks quiet, the engine room is roaring. But there is one thing on the balance sheet that I actually do like, and honestly, it's pretty rare for miners.
Let me guess. Zero debt.
Zero debt.
It's a unicorn in this sector.
It really is. I mean, usually these companies are drowning in debt to fund operations. UEC has a fortress balance sheet.
It gives them what we call operational flexibility. They can fund this ramp up at Hobson without having bankers breathing down their necks.
So if there's a delay, they don't default on a loan.
They just wait. It's a huge advantage.
Okay, so improving losses, no debt, smart mining. Let's talk about the moat.
Yeah.
Why is UEC so special?
This gets to the most important part. UEC has what I'd call a domestic monopoly. They are the largest U.S.-based producer, More importantly, they have the only commercially producing ISR facility in the country right now.
The only one.
The only fully licensed operational one of this scale. You can't just spin one of these up in 6 months. The regulatory barriers are a nightmare. They are in a league of their own.
But it seems like Uncle Sam's getting involved, too.
That's the policy tailwind. You saw the U.S. government fund that passed, right?
$2.7 billion fund.
Yes, $2.7 billion, allocated specifically to boost domestic enrichment. This is enacted policy. That money has to go somewhere.
And UEC is the bucket position to catch that rain.
Pretty much. And the geopolitical situation with Russia is the driver. If you run a U.S. nuclear reactor, you cannot rely on Russian uranium anymore. It's a national security risk.
You need a secure domestic supply. And UEC is the only game in town.
They are strategically irreplaceable. But let's connect this back to your comment about AI.
Right, the sci-fi part.
AI data centers need massive amounts of electricity, but not just any power. They need baseload power. 2047.
And wind and solar don't cut it for that.
Not for baseload, no.
Huh?
The sun doesn't shine at night. Nuclear is the only carbon-free energy that runs all day, every day.
So Amazon, Google, Microsoft, they all need nuclear to keep their AI brains running.
Precisely. The demand shock is coming from Silicon Valley just as much as it is from Washington, D.C.
So the fundamentals are ridiculously strong. Usually when the story is this good, the stock price starts pricing it in way ahead of time. Let's pivot to the charts. Is that what we're seeing?
I was hoping you'd ask that, because if the fundamentals are solid, the technicals are basically vertical.
Vertical is scary. Talk me through it.
We're seeing a textbook breakout. As of yesterday, January 23rd, the stock hit a 52-week high of $20.34.
$20. And where did it come from?
The 52-week low was $3.85.
Wow. Okay, so that's a 5x return.
Yeah.
That is life-changing money.
Exactly. And the velocity recently has been stunning. Just in the past month, the stock is up over 60%.
That's massive. And just for context, the basic materials sector is up maybe 8-9%.
Yeah.
The S&P 500 is basically flat.
So UEC isn't just beating the market, it is absolutely crushing it. It's living in its own universe.
It totally decoupled.
Completely. And the indicators confirm the strength. The 50-day moving average is down at 1320. The 200-day is at 1206.
So we are trading way, way above those averages.
Strongly above. But here is the key. It's not just price, it's volume. On that recent breakout to $19, we saw 3.3 million shares traded.
Which means?
This isn't just retail speculation. That kind of volume means institutions are participating. The big money is validating this move.
Okay, so the chart is screaming up, but markets are driven by people. Let's talk sentiment. Is everyone this bullish, or are we just in an echo chamber?
The news sentiment analysis for the last 10 days is overwhelmingly positive. 8 out of 10 high-relevance articles are either bullish or somewhat bullish.
And what are the headlines saying?
The themes, things like nuclear power revival, sector-wide momentum, and U.S. nuclear fuel policy tailwinds. The whole narrative has shifted.
It really has, from scary to necessary.
Exactly.
But here's where I see a weird disconnect. I'm looking at the analyst consensus. Their average price target is $14.92.
Right.
But the stock is trading at 20. So is the market just crazy, or are the analysts asleep at the wheel?
I think the analysts are way behind the curve. They're scrambling to catch up.
We're seeing upgrades.
A flurry of them. H.C. Wainwright just raised their target to 1975, which is basically where we are. Goldman raised to 17. National Bank shares to 1650.
So they are chasing the price action, rewriting their reports to match reality.
They are. The market moved way faster than their spreadsheets could update.
You mentioned institutional volume. Do we have any names? Who is the smart money buying this?
We do. CoreCap Advisors LLC just increased their position by over 3%. And Marquette Asset Management initiated a brand new position this month.
So new money is coming in even at these highs. That's a very bullish sign.
Yes. And there's another layer to this. We are seeing institutions buying physical uranium.
Wait, explain that. Not the stock, the actual stuff.
Yeah, yes, the actual commodity. They are warehousing yellow cake.
Why does that matter for UEC?
It puts a floor under the price. If institutions are hoarding physical uranium, they're betting that the supply squeeze is real and the price is going up. It creates a safety net for miners like UEC.
That makes perfect sense. It validates the whole scarcity thesis. Okay, you got me feeling pretty good, but now I have to be the buzzkill. We have to look at the risks.
Fair enough. Lay it on me.
2 things. First, commodity price dependency.
Of course.
This whole $9 billion valuation rests on uranium spot prices staying high, right? They're around 85 bucks a pound.
Right.
If prices correct by, say, 20 or 30% down to 60 bucks, this stock isn't going to just dip, it's going to crater. It's a leveraged bet on the metal.
That is a valid risk. However, forecasts from places like Bank of America see continued appreciation. And again, the AI demand is structural. It's a much higher demand floor than we've ever had before.
I hope so. But here's risk number 2. Execution and dilution. The ATM machine risk.
Go on.
We know they are still loss-making. To fund this growth, they use at-the-market equity programs.
You should explain what that is.
Sure. It means when the company needs cash, they can instantly print new shares and sell them on the market. It's great for them, but it's bad for me as a shareholder because it dilutes my ownership.
The classic growth tax.
Exactly. And if that Hobson facility ramp hits delays, and mining projects always hit delays, they'll have to print even more shares, diluting us all even further.
That is the classic execution risk. But I'd counter that with the debt-free status. Because they have no interest payments, they have a buffer. They aren't going to go bankrupt from a delay. They just might dilute a bit.
A safety net, sure, but it's still painful for the stock price.
Fair point.
Okay, we've looked at the good, the bad, and the ugly. Time for the verdict. First, what's the next big date? What are we watching for?
March 11th, 2026. That is the Q4 earnings release. That is the critical checkpoint. We need to see proof that this production ramp is real.
March 11th. Got it. Now, based on everything,
Well,
that's the score.
Taking everything into account, the breakout, the policy support, the monopoly status, but weighing it against that execution risk, I am giving UEC a bullish score of 8.2 out of 10.
8.2. That is a very strong score.
It is. The thesis is simple. UEC is the only U.S. domestic producer positioned to capture a structural supply deficit, period.
Driven by AI and geopolitics.
A perfect storm.
And what kind of time frame are you thinking?
12 to 24 months. That's the window for the full loss-to-profit transition. That's when the real repricing happens.
So for listeners who want to trade this, what's the strategy? It's a vertical line right now.
If you are a long-term holder, if you believe in the whole nuclear thesis, I think buying at current levels, say 1875 to 1950, is justified. Just be ready for the volatility.
And for the swing traders nervous about chasing this.
I would wait for a pullback. Nothing goes up in a straight line. Look for an entry around 1750 to 18. Let it cool off a bit, consolidate, and then grab it.
Solid advice. Don't FOMO into a vertical chart.
Exactly. But the long-term story, it's glowing.
Ah, I see what you did there.
I couldn't resist.
All right, that's a wrap on Uranium Energy Corp. A fascinating mix of tech, geopolitics, and old-fashioned mining.
A perfect storm for a breakout. It really is.
Before you go, make sure you subscribe, like, and comment. It helps the algorithm find us, and it helps us keep bringing you these deep dives.
And let us know in the comments, are you buying the nuclear revival story? We want to hear from you.
Thanks for listening. We'll see you in the next one.
Bye, everyone.